Technical analysis versus surgery. Hello everyone, I am Amy. I'm happy to welcome you to my channel Amy Forex and to the 12th lesson of the 24-lesson course. I'm a professional trader with over 5 years of experience and annual income of $1 million. Trading has allowed me to move to Dubai and live the life of my dreams. I'm also the founder of a successful Forex trading robot. Based on my professional experience, I've created and recorded 24 lessons. These lessons will turn an absolute beginner into a professional trader. The first 12 lessons are the basics that anyone who wants to start making money in Forex needs to know. You can watch them for free on my YouTube channel. The second part of the course is for those who are in need of more in-depth professional knowledge. It's for those who dream of making trading their main source of income, but don't yet understand how. The second part of the course is the real toolbox, the secret sauce of every professional trader. It is in the second part that there is a unique information and detailed explanations of complex strategies that will lead you to a wealthy life. Study each lesson carefully and follow the link in the description and click Start to access the second part of the course, the secret sauce. Do one simple thing and I'll send you the secret sauce lessons. This is life-changing information. After my course, you will be earning sums that you could never have dreamed of before. And now is the time for learning. Proper technical analysis can also help you place a trade in the direction of least resistance for an increased chance of catching a trend. 8 steps to find a good trade. Number 1. Determine the market structure. First, you identify the current trend. As you can see, the price is making higher highs and higher lows, so we are clearly in an uptrend. We should be looking for trade ideas that follow the general direction of the market. Number 2. Look for chart patterns or trend lines. Next, you should look for chart patterns or trend lines that could show you potentially entry opportunities that would go with the main trend. Number 3. Zoom out and locate key levels on higher time frames. Before forming any trade ideas, you should always check if a higher time frame confirms your idea and if there are any strong support or resistance levels that the price might bounce against. Number 4. Check the volume indicator. You should see a decreased volume as the pattern forms and increase in the volume as the price breaks out from the pattern. This applies to most patterns. Number 5. Check Fibonacci retracements. There are many indicators that can help you to get extra confirmation before entering a trade. The concept of Fibonacci retracements is that a directional move in the market will often retrace by a certain percentage. Fibonacci retracement indicators are used to predict potential support levels to where the price could come down after an uptrend before resuming the upward move. Number 6. Locate the entry using a candlestick pattern. To pinpoint the entry price, we are looking for a candlestick formation. Number 7. Set your stop loss. Before entering a trade, you should always know where you would exit the trade if it goes against you. Your stop loss must be at a location where, if reached, will invalidate your trading idea or setup. Number 8. Set your target profit level. Your target profit should be at least twice as big as your risk. That would be a risk-reward ratio of 1 to 2. Ideally, you should look for trades where the risk-reward ratio is 1 to 3, meaning that you'll risk $1 to make $3. Now I will show you exactly how the analysis is done. So how does one determine the market structure? The first thing we do, we determine the current trend, in this case, an uptrend. The rising highs and lows indicate this. The chart shows a rising low, then a rising high, then another rising low, and so on. This is how I determine the trend. In an uptrend, each low is higher than the previous low. In a downtrend, each high is lower than the previous one. The next step is to look for a chart pattern or a trend line. I'll show you an example based on a pattern search. You can see on the chart that there is a liquidity zone and there is a gray area of interest. I'm waiting for an update of this high, then a resweep, a break of the structure, and another upward move. This is a classic double bottom pattern. This example also shows a trend line. You can see a downtrend because each high is lower than the previous high. And now I'm going to show you on the chart how a trend line is built. That is from the lows. Typically, when the trend line breaks, an entry with a stop loss is made behind the closest fractal and a take profit made behind the closest area of interest. What is a key level in the upper time frame? The key level is this order block. From here, I expect to see more upward movement. In this case, I focus on the upper time frame because this is the best buying point. Next, the volumes. This is one of the most important market indicators, but in the Forex market, volumes do not always correspond to reality. This is because it is an OTC market and there is not one common liquidity provider. The volume is different for each broker. That is why I do not use it to trade currencies. But it works perfectly on the stock market and for the cryptocurrency market. The next step is to determine the depth of the correction. You see an upward movement. This is the low, this is the high. I'm going to draw a Fibonacci grid from the beginning of the move to the end of the move. I'm moving it to the right, so it doesn't overlap the candlesticks. For an uptrend, anything below 5 is the discount area, and the area between 0.62 and 0.79 is the OTE area. This is the best place for entry. Right now, the price is right in this area. I'm waiting for this order block to be touched and for more growth. If we go short, we should find a downtrend from top to bottom and stretch the Fibonacci grid from the high to the low. Everything above 0.5 is the premium area. From 0.62 to 0.79 is the OTE zone, the optimal trade entry. Let's move on to the final step. I use a candlestick pattern to enter. The most popular pattern is the engulfing one. It looks like this. You see a white candlestick rising, and the next candlestick is closing lower. That's an engulfing pattern. This shows the strength of the other side. That's the engulfing. The lower candle closed below the point where the previous candle opened. Let's move to the lower time frame. You see a rising white candle completely overlapped by a falling green candle. It's important to keep the context in mind. For example, you can't look for an engulfing pattern in the middle of a range. There was a liquidity withdrawal followed by the engulfing pattern. After that, I set stop losses and take profits. In this case, I'm entering an engulfing trade, so I set a stop loss at the next high or a low. It's the same with take profit. It's better to use a ratio of 1:2 or 1:3. This is the end of lesson 12, the last lesson of the free course. Don't forget to subscribe to the channel so you don't miss any important information. Also, be sure to follow the link in the description, text me, and start trading with the robot. Don't hesitate, do it right now. Those who started using the robot to make profit 6 months ago have already made about $20,000 without any effort. Do the same and soon your financial situation will improve. Like this video and I'm looking forward to seeing you again.